and it seems to be exporting deflation through steeped up exports of goods. This is already impacting the chemical sector across the value chain. Given that, we at PI overall year-on-year basis during Q1, we have delivered a 24% revenue growth and a 35% increase in EBITDA, and a profit after tax recorded a 46% growth year-on-year. PI has though maintained course of healthy performance in its CSM exports with a 33% growth year-on-year. This performance comes back with continued strong growth in further endorsement of our approach to the business. Our domestic business performance for the quarter has been subdued due to the delayed onset of monsoons, but on the positive side, we have kept tight control on trading working capital, and overall market scenario has focused more on qualitativeness of the revenue than the volumes. We are confident of getting back on a growth path with the normalization of rainfalls during the second half of the Kharif season. We continue to maintain the momentum of new product launches. 5 innovative products planned in this fiscal year. In the Q1, we have launched Iketsu. Iketsu is India's first 3-way herbicide mixture to provide maximum weed control and efficacy for total control of rice herbicides. This will further fortify our portfolio of rice crops, already one of the best in the industry. The business has long pipeline of products, yet exciting launches ahead. Our business model is aligned to commercialization of advanced molecules for innovators. Thanks to our very visible track record, our engagement of scale-up as well, this goes beyond AgChem near-ready. It is our intent to create a dedicated platform for the pharma CDMO, CRO-CDMO play. I would like to share that this process of integration of our pharma CSM acquisition is underway and tracking internal milestones. Our combined R&D capabilities with a brand new integrated pharma research center being developed in Hyderabad for the CRO and CDMO, offering further boost on to our business proposition. Our forte has been of a vast library of knowledge of complex chemistries with high scalability and competitive manufacturing footprints, and our ability to tailor our solutions with specific circumstances to meet and be customer-centric. The continued traction is delivering and driving healthy accreditations to our order book position in a virtuous cycle between innovators and PI. During the quarter under the review, we have commercialized 1 new molecule and remain well on track for commercializing 4 to 5 new molecules every year as guided earlier. While the industry outlook for the AgChem demand is soft with some forecast projected single-digit contraction in the year 22-23, relatively to the previous year. However, at PI, to respectively focus on new chemistries and balanced portfolio of products, we give the visibility that we enjoy and remain cautiously optimistic to achieve the given target between 18 to 20% revenue growth in the current fiscal despite the headwinds explained above. We shall keep a close watch on the market scenario and review our guidelines after the upcoming Kharif season. This will be supported by ramped up production of already commercialized molecules and the introduction of new molecules. For the long-term perspective, India remains the locus of growth in chemicals. It is believed that India has achieved the AgChem export of worth 5.4 billion in 23, up by 10%, making it the second largest exporters of AgChems in the world. With policy supported by manufacturing AgChem, these exports are expected to double in the coming 3 to 4 years. India is already the 4th largest producer of AgChem, now number 2 in the world from the previous year. The government is considering a PLI scheme for chemicals and petchem domestically, and that can further accelerate this trend. With policy activation as a catalyst, the industry plug the gap in the value chain in order to offer innovators of chemistry as well as customers at the end added incentives to expand here. Therefore, the long-term perspective of this specialized chemical industry remain bright despite the current blips. PI remains dedicated to driving progress in a sustainable manner. ESG still remains the center point of every initiative on a growth execution. We deem it as our responsibility to align our process production products for thriving and a vibrant environment for our purpose of reimagining a healthier planet. This reflects and can be tracked through our outcomes we have scripted. I now close my perspectives and hand it over to our CFO, Mr. Manikantan, to take the discussions forward. Thank you once again to all of you. Over to you, Mani. Thank you.
Thank you, Mr. Sanjay. Good evening, everyone, and thank you for joining us the call today. I summarize the company's financial highlights for the fourth quarter ended 30th June 2023. Please note all these comparisons are on year-on-year basis and refer to the consolidated performance. During Q1FY24, we reported a revenue of 19,104 million, a growth of 24% year-on-year, including newly acquired pharma business, and 21% revenue growth in AgChem. This was driven by growth in export revenue by 37% to rupees 15,630 million, offset by a 13% decline in domestic revenue to 3,474 million. Export revenue growth in AgChem was 33%, comprising volume growth of 29% and 4% from price, currency, and favorable product mix. This quarter, total export revenue included pharma revenue of 443 million, comprising around 2 months period for Archimica from 27th April 23 onwards and 1 month period for Therachem from 2nd June onwards. Domestic revenue was contracted by 13% year-on-year due to delayed monsoon leading to volume degrowth. Growing margin increased to 47%, gross margin increased to 47% including pharma and 46% excluding pharma. Gross margin excluding pharma had jumped by 201 basis points. Pharma gross margin was 75%. EBITDA increased by 35% to rupees 4,726 million for the quarter on account of favorable product mix and operating leverage. EBITDA includes pharma EBITDA loss of 54 million after one-time acquisition, integration, and initial business setup expenses. Profit after tax increased by 46% to rupees 3,829 million, attributable to EBITDA growth and lower effective tax rate despite higher depreciation. Cash flow from operation activity during Q1FY24 was 3,028 million. Trade working capital in terms of number of days of sales improved to 83 days as of 30th June 2023 versus 102 days as of 30th June 22. Inventory levels reduced in terms of days of sales to approximately 73 days to 14,049 million, excluding pharma inventory of 1,216 million, versus 89 days as of 30th June 2022. Our balance sheet further strengthened during the year. Net worth increased to 76,094 million as on 30th June 2023. Capex in Q1 was rupees 6,490 million, including pharma acquired assets of rupees 5,249 million through business combination. The Capex excluding this addition is rupees 1,241 million. During the quarter, we completed pharma acquisition of Archimica and Therachem Group amounting to rupees 8,560 million. Post acquisition outlay, the surplus cash net of debt is rupees 28,066 million, including balance in KFI funds of 11,320 million. KFI funds remain invested into the deposit and debt mutual funds with SLR philosophy, while final deployment aligned with PI's long-term growth strategy is underway. This concludes my opening commentary. I will now request the moderator to open the forum for Q&A. Thank you.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and one on the touchtone telephone. If you wish to remove yourself from the question queue, you may press star and two. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. Thank you. The first question is from the line of Aditya Jawar from Investec. Please go ahead.
Yeah, thanks for the opportunity. Congrats on strong set of numbers. My first question is on our pharma assets. So how is the integration process progressing? And if you can give some, qualitative information on the same. And how should we think about growth of this business? Do you foresee a significant increase in capacity utilization in these two assets versus around 50% what we saw last year?
So thanks for the question. I'm Anviljan here. So I think your first question is about the integration piece. So, we are integrating the three pieces. One is the Clinica, which we acquired entity in Italy, another is the JRM, which is US and India, and then our head office center, which is newly built up and also in full swing for the ready to serve. Now, currently, I think our progress on operating model, functional and IT integration of these units, and we are also working on the global advisor for the business transfers across these areas in R&D and in manufacturing supply chain. And right now we are on the track, and this activity would continue for almost a quarter more during this part. The second part is that on the pharma revenue. So I think our aim is to get that 550 crores which we have set. We are aiming in that direction. Gradually, on the quarter, this will build up. Right now, in this quarter, we are only talking of one company operating on 26 days and another is on 34 days. So that's the right now number, which is not very rational to what plan we have submitted. So gradually, this will improve, and I think we will be home what we have committed to this trip.
Okay. That's quite helpful. Now, in this quarter, there was this one-time acquisition and integration cost. If you can just call out what was the quantum and how should we see the margin trajectory of the pharma business in the remaining part of the year?
Yeah, so in this quarter, in terms of financial, there were a couple of one-offs. One is obviously the acquisition and business setting up costs and all, to the tune of more than, I think, 100 or 120 million rupees. The other is the impact of the Ind AS 115, because the acquired entity, particularly the Indian acquired entity, was not accounting as per the Ind AS, whereas in 3i Health Science we follow the Ind AS. So because of these impacts, those one-off impacts have come. Going forward, as we have indicated earlier also, that there are going to be initial phases where we will be investing in the development of these businesses, acquired businesses, and also transformation of some of these businesses. So obviously the EBITDA margins that we are looking at is going to be on a lower side. But on maturity, we would surely expect and target 22% plus kind of 20-24% plus kind of margin once we get to the maturity, which will take few quarters time or maybe more than a year's time. In the initial phase, we are expecting anywhere between 14-15% kind of margins that we have indicated earlier.
Oh, that's quite helpful. My final question is, sir, what would be the total CAPEX guidance for FY24? It would be great if you can give a breakup between CSM and domestic, as well as the pharma piece, the core business and the acquired assets, sir, separately.
So we had, as you recall, we had indicated close to 850, 900 crores kind of CAPEX for the AgChem business. Okay.
Yeah.
For pharma, we have already also indicated close to $12 million is what that we will be investing. So that's the current guideline on the CAPEX. We maintain that guideline.
Perfect. All the best. I'll spoil back in queue.
Thank you.
Thank you. Ladies and gentlemen, in order to ensure that the management is able to address questions from all participants in the conference, please limit your questions to one or two per participant. Should you have a follow-up question, we would request you to rejoin the queue. Our next question is from the line of Rohit Nagraj from Centrum Broking. Please go ahead, sir.
Yeah, thanks for the opportunity. So first question is, you have mentioned in the presentation that 13 top molecules identified for capacity enhancement. These are the molecules which have been launched in the recent years, or these are more matured molecules, and we have seen a good amount of scale up happening from the offtake perspective. Thank you.
Yeah, so these are all operating, objectives that are taken by our cross-functional teams on a regular basis. And these are not recently launched molecules. Over the years, we have commercialized many projects. And out of those projects, many of these projects, as the processes improve year on year, our teams have identified opportunities of throughput improvement and all. So that is pertaining to that, activity of continuous improvement.
Right. Got it, sir. Sir, second question is, in commentary as well as in presentation, we have said cautiously optimistic on the CSM segment. So in the last 1.5 months of the current quarter, have we seen any kind of slowdown in terms of volume offtake? And a concurrent question to that, the 18 to 20% guidance, does it now include the pharma piece as well, or is it excluding the pharma piece? Thank you.
So as far as the trend is concerned, the global scenario, etc. is concerned, so it's not only last 1 month, 1.5 months, but we have been seeing this for last few quarters, that there are certainly headwinds in general in the industry, okay? And that is more particularly towards certain category of products on the generic side. So far, we have not seen a dramatic change as far as the demand scenario for our products are concerned. But while we are saying cautiously optimistic, because ultimately, some such longer-term trends may have some impact on overall general industry demand scenario as well, though we have not seen it so far. But as indicated, we would also like to review this overall plan and guideline maybe post-Kharif season. By that time we'll have a better understanding and better visibility of that. But at this point, we do not see any dramatic change or new development.
Right, sir. And it include pharma as well? Just to clarify.
Sorry?
The 18 to 20% guidance that we have.
Our idea is that pharma, whatever contribution it comes, will be on top of it. But as I said, we will review all this post-Kharif season.
Sure. That's helpful, sir. Thank you so much.
Thank you. Our next question is from the line of Sumant Kumar from Motilal Oswal. Please go ahead.
So, sir, can you talk about the domestic business 13% degrowth and how the things are panning out in the current season, in the coming quarter?
Yes, Prashant.
Yeah, so the first quarter, you already might have seen from the industry. In fact, we anticipated it from at least last 3 or 4 months. So that is why we are also cautious in terms of our procurement, especially on the generic products, knowing this volatility. However, from July onwards, the positive momentum has built up. We having especially commercialized 7 new products last year. Those are doing good, and this year also we have a plan to launch 4 new products. In that, 1 we already commercialized in Q1. So this has definitely helped us, and this will continue to basically help us in terms of showing positive results in coming quarters.
So basically, just to add, in terms of market sentiments, market activities, there is certainly improvement compared to what we have seen in the first quarter. But yeah, still there are a couple of months to be monitored and seen that how overall Kharif season is panned out. Yeah.
Can you talk about pharma like-to-like growth quarter YOY, and also what is the quarterly run rate if we'll consider as from the month of April, but for the both subsidiaries?
Yeah. So first of all, it is not possible for us on Y-to-Y, like-to-like, because as Anil explained earlier, one business, we have the revenues of maybe 30 days or less than 30 days. The other business, we have revenues of maybe, I think, 50 days or something. So we certainly do not have part data of these companies' businesses for the previous year. So that is the reason we do not have that like-to-like comparison. And why this business or current quarter performance, I think Anil has already explained. Maybe you may want to add something.
So as I said, now it's only 1 month performance right now, and the CRO and CDMO businesses generally they are all the customer delivery driven. They are not driven by the months. So that's sometimes it comes up, but then they are confident, as we said, in the coming quarters we will be able to meet our expectation of the number as well as the margins also.
So I am asking whatever the number we have published in the acquisition note for the FY22-23 or say CY23, there will be any growth on that?
Yeah, so those numbers, if you see, those numbers were for, first of all, calendar year, if I'm not wrong. One business is calendar year, the other business is also calendar year, part of it is financial year, so we'll have to see. But that on annual basis, what is that we will be finally seeing the number. But yes, in certain business we are expecting growth. In some other business, it is kind of flat as per the current rate. But on like-to-like, on quarterly basis, the data is not there for us to give you the straight answer.
So the line for the participant has dropped. Maybe I request the management we move to the next question, please.
Yes, please. Yes.
Thank you. Our next question is from the line of Vishnu Kumar from Avendus Spark. Please go ahead, sir.
Thanks for time, sir, and congrats for rockstar numbers reported this quarter. I wanted to understand on pharma, just on continuation, now that all the plants would be running fully, is it like 150 to 170 crore at least would be a current run rate that we'll achieve from 2Q onwards? If I just do some approximation on the pro forma numbers.
That's what our guidance says, what number we give should be. We are hopeful of going in this direction in the coming quarters.
Understood, sir. And also on the CSM side, we see that 29% volume and pricing continues to be positive, but with across raw material deflation, wanted to understand how long this pricing will continue. And generally, when we talk to the customers, when does this price negotiations happen? Because there's a deflation, should we continue to believe that this will help us on the margins, or at some point we'll see some pricing cut?
So first of all, this deflation, raw material deflation is not all across the product. Obviously that varies from product to product. That scenario also, the raw material price trend varies accordingly. But yes, wherever there is substantial improvement in raw material prices or reduction in raw material prices, obviously going by our business model, those prices are factored in the next supplies or next contracts or purchase orders and all. So yes, that always takes place.
Okay, so this 25% margin would be a new normal to be considered, or any guidance on the margins if you could help us understand?
So we have, as in past also we have explained that this 24-25% margin obviously is coming from 2-3 sectors. One is obviously the operating leverage. The other is the product and business mix and all. And yes, we are relatively confident that given the kind of visibility of plans, business plans, volumes, values that we have, we should be able to sustain these margins.
Got it, sir. And one final, if I may, so we've done almost 30% growth plus in the CSM, and you also mentioned that our growth is not impacted. But if I take 18-20% guidance, it looks like even if you do 10, 12 or 12 to 14% growth is enough to achieve the guidance. Is this like we are taking a conservative approach, or you have some indications that your delivery schedules in second half will be slightly lower? Just some sense here.
No, we are cautious. It is not conservative or optimistic, but we are cautiously optimistic that yes, and in any case, as indicated, we will review this overall situation maybe 3-4 months down.
Got it, sir. Thank you and all the best.
Thank you. Our next question is from the line of Abhijit Akela from Kotak Securities. Please go ahead.
Yeah. Good evening and thank you so much for taking my question. Just two from my side. One is on the capex for the quarter. It seems to be about 120 odd crores, excluding the pharma acquisitions. We've guided to almost, I think, 850-900 crores for the full year. So should we expect a big acceleration in the remaining part of the year?
Yeah, so this is as per the plan only. The major part will be coming in subsequent quarters as the execution happens. But yeah, and the overall year's plan remains what I indicated, around 850 odd crores.
Okay, thank you. And the second thing is just that on the guidance, 18-20% growth. Earlier I believe it included the domestic business also. So in light of this quarter's challenging performance there, do we sort of stick with that expectation, or should we assume that 18-20 is only for the CSM piece for now?
Yeah, you are right, and that's the reason at this point we are saying we are optimistic cautiously that if things pan out well for the remaining period of Kharif, we should be able to get there. But if not, then we will surely come back with our revised estimates.
Okay, sir. Understood. Thank you so much and all the best.
Thank you. Our next question is from the line of Vivek Rajamani from Morgan Stanley. Please go ahead, sir.
Thank you, sir, for the presentation and congratulations on a very strong result. So two questions from my side. Firstly, on agrochemicals, if it's possible to give some color on, what is the kind of inventory situation that you're seeing for your specific products. We've obviously been hearing that there's a lot of inventory across the system, but if you can provide any kind of color with respect to what you've been hearing from customers, that would be really helpful. And the second question I had was on margins. Again, very, very strong margins that we've seen this quarter. Just wanted to get a sense if there was any specific factor that you would like to call out which was driving this sequential jump. And just going forward, should we be aware of any seasonality in the upcoming quarters? Thank you so much.
Well, in terms of inventory in general, we do not see a significant, challenge or stocking in the kind of products that we are dealing. But yes, there are maybe few products where we may have some sort of indication. But in general, there are no such big stocking issues. Okay, the kind of products that we are dealing in our exports. In terms of domestic, maybe Prashant, you may kind of highlight.
Yeah, so thank you. Yes, overall, we know the price has been volatile, so that is why we were cautious even in Q1 in terms of our placement as well. Now with the demand picking up, we don't see any major concerns so far. Because the overall domestic side demand is now from July onwards, we are seeing that it is coming out stronger. However, again, it is last 1.5 months only. We are cautious. We have to wait and see how these things progress for remainder of the Kharif season.
And your second question in terms of margins, I already explained to the earlier participant that last year from 20 to 22.5, 23%. Currently we are whatever few hundred basis points that improvement is there. Is mainly on account of the operating leverage and kind of product mix, the kind of revenue quality, particularly in the domestic business where the volumes were becoming challenged given the overall market scenario, monsoon situation. We have very clearly focused on the quality of revenue and margins, and that is obviously clearly reflected here.
Got it, sir. Thank you so much and all the very best.
Thank you. Our next question is from the line of Ankur Periwal from Axis Capital. Please go ahead, sir.
Hi, sir. Thanks for the opportunity and congrats for a good set of numbers. My first question on the R&D side. Looking at the annual report, we have seen a sharp increase in the R&D manpower as well as spends. So just, your thoughts there. Is it largely related to the chem side or the new chemistry side, or it is also focusing on the pharma and probably one can expect a larger number of new product launches there?
So clearly, in March 31st, we didn't have the pharma engines on. This is clearly focusing the ag chem side and the process research and development side, and also the biotransformation side that we put in there, yes.
Sure. So the incremental addition that we have seen now, will this also be including the allocation for the pharma R&D?
No, that is going to come now, as I said, because the pharma piece will come up later, right?
Sure. So, looking at the last 3 years number, there is a almost doubling of the manpower there. Anything you'd like to share on the, the other performance chemicals or the electronic chemicals that we have talked about earlier?
Yes, so clearly we have taken some of those areas to work. I think the good part is we definitely can update about where we are in the commercialization of some of the fine chemical areas and what we're seeing there. Please go ahead.
Yeah, so there had been good amount of traction around the electronic chemical segment, and there are a good amount of inquiry in pipeline and at the advanced development stage. We would be commercializing possibly the 4 or 5 molecules in the electronic chemical space. And as Mr. Mayank said that there are other adjacencies where we are trying to build a platform for the biotechnology, fermentation, and the other new technology. And that's where, the additional, the resources have been pumped up.
Sure. That's helpful. And secondly, we also talk about, rejigging our product portfolio, focusing more upon, the ESG angle or the environment part of it. Is this comment largely focused on the crop protection, the domestic business, or you are including CSM also here?
No, if you look at PIs, it's a part of the PI strategy in every facet of our products, just not in one business area or two. I mean, we definitely look at this, whether it's AgChem brand, whether it's manufacturing, CSM, automotive health sciences, automotive electronics. We're going to keep that anchored as a key driver.
Sure. That's helpful. That's it from my side. Thank you.
Thank you. Our next question is from the line of Rohan Gupta from Nuvama. Please go ahead, sir.
Yeah, hi, sir. Good evening and thanks for the opportunity. Congratulations on such a strong set of numbers despite weak industry scenario. Sir, first question is on further clarification on that. While we are seeing that the entire industry is suffering from the inventory destocking, especially in a global market, we still have been managed to grow 29% in terms of volume growth. Sir, if you can explain a little bit more, is it some because of the nature of our product or the product basket which we have that continuously seeing the higher volume growth and there was no inventory buildup has happened in last 1 year at all, and that is driving the growth, or it is just only that customers keep on buying from you without any pushing or without any delays or spillover, that is still driving the growth for you and may impact our growth going forward if they are consuming or if they are sitting on the inventory on our behalf?
No, the earlier is the reason. It is all about quality of product portfolio. Okay, which is driving this growth for us. These are, as you know, early stage molecules. They are growing in different markets. And so far, our customers have also, and these are not mature products per se compared to some of these generics which are getting beaten in the market, global market. So as a result, our customers are also not facing some significant challenges or concerns around, inventory pile-ups and other things. And that is the reason that the continued growth is there in these kind of products.
So, sir, if I extrapolate this thing, and if since we have not stuck with the higher inventory in the system, and there is no Chinese dumping probably in our case because we are early stage of product. So end customer demand, and especially for the new molecules for products like us, is still so solid that we have been able to deliver a 29% kind of volume growth. If the industry would not have stuck right now with the high inventory, which is the case for most of the products in the market, do you see that the farmer level demand is still so strong as what is in case of your products? Definitely your products are in early stage molecule, but still farmer level demand is very strong.
Well, my personal view is that farmer level demand is strong even for generics, by the way, where there is a beating currently. The challenge is coming because of high inventory in the channel. So the inventory destocking is happening at the channel level. But that doesn't mean that the consumptions have gone down or acreages have gone down. That is not the case. So yes, even in the generic products, it is more about the channel destocking than the significant reduction in consumption. You take any global scenario and also local scenario in terms of acreages, Prashant can add in terms of acreages, crop acreages. We have not seen any significant reduction or reduction in products, any significant reduction.
Yeah. So yes,
the other impact, before you come up, the other impact is of price. You know that some of these generic products, the price impact has come. That products prices have gone down and therefore the values have come down, which is not a major issue in case of products that we are dealing. Yes, Prashant.
Yeah. Overall, in terms of acres, there was a delay in terms of sowing. So end of June, we have seen somewhere around 60 to 20% reduction, especially in rice. But if I look at just few days back, overall it is more or less similar to last year. If I look at all the crops, yes, rice is up. That is a positive news. However, cotton is down by around 2%, rice is up by around 3%, and pulses are down by 9%. But all other crops more or less similar to last year, and overall crop area is 0.2% down compared to last year. So this is nothing. So it's more or less the demand is definitely looks like coming up, but as I said, still we are early into Kharif and we have to wait and watch.
Sir, just on the extrapolation of the same thing, since you are saying that we are not stuck with high inventories in the market and demand from the farmer level remains strong. So when other companies are giving the commentary, they are not sure about how much inventory is there in the market and what is going to come up from China. But in our case, we should be fairly confident about it if the farmer level demand is strong. I still didn't get the reason that we still making a statement like, cautiously optimistic, while we are seeing that the farmer level demand is coming and it is still strong. I understand that the domestic market may have volatility with the Kharif crop volatility, but as far as the global markets are concerned, we should be fairly confident about our volume growth in the current scenario. Isn't it, sir?
No, well, that is a very optimistic way of looking at it. But if you look at if a product B is rather high in the inventory and the price point go below a certain point, it does have a temporary glitch, right? You can't say that it doesn't have any impact. So those are the big things we are cautious about. We are watching. Yeah, the buffer is there, but that obviously becomes a little impactful. But you don't go out and say, okay, because of that, I'm going to start doing erosions, which are short term in order to meet that, because that's going to help and not going to change scenarios. So I think this is, there's a balanced world economy which you need to keep to look at. Demand scenario, competitive price, product availability, and how the balance between availability and value creation. I think that's
Secondly, just to add one more point, there is always a lead and lag, even in getting the information on the ground. You see, this is not a very advanced industry per se. I mean, from the agriculture and rural fields, or even in the global arena, the inventory data coming from the rural market, it's not. I mean, there is always a lead and lag. So we have to be a little cautious and careful in all these, even reading these data points.
Fair enough, sir. I need one more clarification if I'm allowed, otherwise I can come back in queue. Sir, looking at the console and standalone numbers, your implied cost seems to be significantly higher on console. That talks about the subsidiary, which pharma we have acquired, roughly 23 crore rupees is a difference. While I understand that the one-off item which you have mentioned will be in other expenses. So 23 crore probably for a 1 month where we have accounted. So it seems fairly high. I just wanted to understand any particular adjustments there.
Can you repeat your question? I missed your earlier part of question.
Sir, employee cost on console is 173 crore and standalone is 150. That means that for the subsidiaries, pharma assets which we have acquired, roughly 23 crore. That's a fairly high number. And I believe that the one-off which you have mentioned will be adjusted in other expenses.
Yes. So, there are both the aspects. I don't know how you have come to this comparison that number is high or that number is low. So first of all, how you are relating this to is also not very clear to me. But yes, if you look at the acquired business, the overall revenues and etc. are for a very, very small period. There are also setting up expenses that are happening. For example, we are still setting up our Hyderabad lab. We are still setting up. We are also acquiring many of these top leadership players in the pharma space to overall unleash the overall value out of these acquired assets. So yes, in the initial phases, as indicated earlier, we are certainly going to see some of these development spend, including the manpower spend.
And sir, in your consolidated reporting, when we have started giving segmental financials, we also have some part of business coming from pharma, but that is not clubbed in a pharma segmentation. Any particular reason for that?
In the segmental thing, what is coming under pharma is already stated in pharma only. That is separate cost.
But sir, we had 5 to 10% of our revenue coming from pharma.
Yeah, so 443 is coming from pharma. No?
That's right.
44 crore rupees, right?
Yes.
But that is only from the subsidiaries which we have acquired, right?
Yes.
That
is our subsidiary, PI Health Science, which is comprising of the entity that we have acquired in Europe, that entity we have acquired in India, and also.
But the PI standalone basis also had some pharma business. We understand 5 to 10% of the revenue used to come from pharma. Why that is not led to the
I don't know where you have got this number. 10% from pharma? No, not at all. Not at all.
Okay, sir. So that's thank you. Thanks a lot for the
Thank you.
Thank you. Our next question is from the line of Vishal Birai from Bandhan AMC. Please go ahead.
Thank you. So the question is on ag.
Sorry to interrupt, Mr. Vishal. You are not audible, sir. Could you please use your handset?
I am using the handset. So,
sir, we can't really hear you, sir.
The question is on the future growth for the CSM business for the next 2 years. As to you guided for 18-20% this year, then what would be the growth for the next?
You're not audible.
So your voice is
Gentlemen, you're not audible. If you can please change your mic. Not clear.
Mr. Vishal, may we request you to rejoin the queue? Thank you. Our next question is from the line of Naushad Chaudhary from Aditya Birla. Please go ahead.
Thanks for the opportunity. Firstly, follow up on the electronic chemical piece, which you indicated 4 or 5 molecules we are planning to commercial. So just wanted to understand in terms of the size of opportunity you see here in this piece of business, and how big can it be for you in next 3 to 4 years?
Well, let me answer that to tell you that the electronic chemical business is just an entry point right now. There is not going to be a significant number in the PRA, but in the next 5 years, we do believe in the specialty chemical area. We don't call it specialty, but fine chemical area. We would see some decent numbers. It's not just electronics or semiconductors or specialized polymers, which all go in the same application. So we could see a few percentage points in that direction.
So in 5 years, can it be, in terms of capital deployment, can it be as big as we currently have the CSM Agri and the plant which we have in pharma? Can it consume?
Certainly not the same size as AgChem that we have, because you'll appreciate that where are we in AgChem today is the work of last 25 years, okay, and investments made over this period. So what is being said is that with our efforts in last 3-4 years, we have already now got to a stage where we are commercializing several of these products, non-AgChem products, including electronic chemicals, specialty polymers, etc. And this would surely become a reasonable percentage of our overall revenue. But this cannot be the same or I mean, it would be speculative to think that it will become of similar size as our AgChem business today. No, it won't.
Understood. And secondly, on the pharma side, so 900 crore rupees we have deployed on the remaining 1,100 crore rupees. Any development on that side?
Come again? I mean, your question was not clear.
So the capital deployment piece on the pharma business side, we had around 2,000 crore rupees of plan. We have deployed around 1,000. So pending 1,000, any development?
Yeah. So let me clarify here. First of all, the QIP, the 2,000 crore that was raised was not only for pharma acquisition, okay? That was for several of our strategic long-term initiatives projects, including pharma, of course, for diversification into adjacencies in pharma. For pharma, we have already kind of allocated close to 900 crore, as you mentioned. For the remaining, we are also looking at several opportunities, including some of the bolt-on opportunities in pharma. We are also looking at other M&A opportunities in the space of, AgChem, domestically also, and also outside India. We are also looking at opportunities, inorganic opportunities in other technological areas like biochemicals, biosolutions, and several other such opportunities, maybe including brands, distribution, etc., beyond the pharma. I hope this clarifies.
Understood, sir. Thank you so much, and all the best.
Thank you. Ladies and gentlemen, in the interest of time and fairness to all participants, may we request all participants to restrict 1 or 2 questions per participant. Should you have a follow-up question, we would request you to rejoin the queue. Thank you. Our next question is from the line of S. Ramesh from Nirmal Bang Equities. Please go ahead.
Thank you very much, and congratulations on the pharma acquisition. So if you were to look at the pharma capital employed, is it possible to share what is the working capital in that piece and any accumulated losses? And secondly, once you reach that normalized revenue of 515 crores, what is the kind of investment you'll require on both gross block and working capital? And how do you see the growth in the revenues over the next 2 to 3 years? And is there any clarity on the order size you can share with us now?
Yeah, so there are several questions in your question, but let me try and answer them one by one. So yeah, I mean, I think we indicated earlier that yes, next 3-4 years we would surely want to more than double this business, the kind of business that we have acquired. That is one. The investment details are already there in our presentation also, and also earlier release. And going forward, as we are scouting for more business, and particularly of better quality business, of course, we'll be making certain investments. We have already indicated close to $10-12 million investment in the current financial year. Likewise, depending on the business opportunities that we are able to scout, we will be deciding on further investment. But in nutshell, the overall idea is that we would surely want to, and we are internally committed to kind of build this a scalable, differentiated business over next 3-4 years time by making further investments.
Okay, and the second thing is on the domestic market, there's a mention about 9% of your revenue coming from biological products. So how do you see the domestic business performing under normalized demand based on the new launches, and what is the kind of aspiration for the share of biological products in your domestic portfolio?
Yeah, Prashant, maybe you can explain that.
Yeah, so biological products, as I said earlier as well, we have a plan to launch 2 products in this year. One which we are launching in this month, and one in Q3. Definitely there is a good traction, even though there are many products, especially generic side, which we have seen some challenges. Biological products are growing in double digits, and they will continue to grow. So that is what which we are basically estimating at this point of time.
Okay, thank you very much, and all the best.
Thank you. Our next question is from the line of Krishan Parwani from JM Financial. Please go ahead.
Yeah, hi sir. Thanks for taking my question. Just 2 small clarifications from my side. So the first is, has there been any purchase order deferment in the ongoing quarter?
Not really.
Okay. Thank you. And then the second is, since second half is usually strong for us, do you see that trend changing in any sort in this fiscal?
No, as explained earlier, I mean, so far we have not seen any dramatic, change in the scenario, demand product scenario, the kind of product that we are dealing in. But given the overall industry situation, we are also very cautiously monitoring the situation. And in next 3-4 months' time, we will have certainly much better understanding, visibility, which we shall certainly consider while coming out with our guidelines post the second quarter.
Understood, sir. Fair point. Thank you so much, and all the best, sir. Thank you.
Thank you.
Thank you. Our next question is from the line of Rohan Vora from Purnartha Investment Advisors Private Limited. Please go ahead.
Thank you for the opportunity and congratulations on the strong set of numbers.
Sorry, Mr. Rohan, may we request you to use your handset, please?
Yeah, congratulations on the strong set of numbers. Am I audible now?
Yes.
Okay. So sir, my first question was on the operating cash flow side. So as we've seen that we've brought in efficiency.
You are not audible now. We are losing your audio, please.
So sir, my first question is on working capital days. We have seen efficiencies in working capital days in this quarter. So can we treat this as a norm? Is there a scope of still better working capital days, or the days will go up from here on?
No, we certainly see some more opportunities of improving working capital in some of the business areas, which will obviously the turn-up will happen. But yes, in short, yes, we see some more opportunities of further improvement.
Sure. And sir, my second question was on the horticulture business. So just to get a idea about what would be the size of our market, in that particular segment, horticulture, the products that we deal in.
Which segment you said?
Horticulture.
Prashant?
Yeah. Overall, in terms of AgChem revenue, if I see what is contributing from horticulture is roughly around 30%.
So 30%. And what would be the size of the pie, just the market as a whole, which for the product that we deal in?
Yeah, so it's the revenue which basically what the horticulture products which are contributing to our domestic revenue is around 30%.
Understood. Sir, I wanted an idea on the market, if you can, just a ballpark number would be fine. Like the size of the market.
So overall, if I look at what is contributing horticulture roughly in the industry is somewhere around 25 to 30%. If you look at what is the AgChem market in India, around 25% is contributed by horticulture.
Thank you so much, sir.
Thank you. Ladies and gentlemen, our last question for the question and answer session is from the line of Yash Mehta from Steinberg Asset Management. Please go ahead.
Hi, thanks for the opportunity. My one question is that after the acquisition of the two entities and now that you are currently in the middle of the integration, how has your view evolved on how you think about this business from a longer term standpoint, in terms of you always maintain you wanted a differentiated model, but incrementally as we see more and more businesses, they are becoming similar to each other. Who are operating in the CDMO space. So actually some
yes, if I may interrupt, you are absolutely not audible.
Not audible at all.
So if you can please
maybe request your answer, please.
Repeat your question.
Yeah. So certainly, I hope I'm audible now. My question is that now that you've acquired and are currently in the middle of the integration, how has your thoughts evolved on the pharma piece? You've always maintained you wanted a differentiated model, but as we analyze the different businesses that are operating in this space, they seem to be getting more and more similar to each other. Would like and would we be able to kind of share some light on this?
Yeah. Anil, I think if you see the entire value proposition right now, you have many CRO, CDMO players in the market, and they are offering the services which includes discovery, which includes the manufacturing. But in the PI, we are also offering the end-to-end pipeline, right? Starting from the key starting material to the API. That's what the mission is going to the PI. We would be taking our legacy of strong foothold in the basic chemical manufacturing, which covers a lot of hazardous steps and majority pharma reactions come across fluorination, bromination, coordination, or you name any hazardous reaction, they are already present as part of the our PI legacy. With this, we have become much more stronger than the market. We are offering the entire value proposition starting from RSM to KSM to discovery, development, manufacturing, and API. That's how the unique proposition we have and differentiate from the market.
Thank you. That's very helpful.
Thank you. Ladies and gentlemen, that brings us to the end of our question and answer session. I would now like to hand the conference over to the management for closing comments.
Thank you, gentlemen and ladies, for joining this call and your continued interest in PI. Thank you so much. Have a good day.
Thank you. On behalf of PI Industries Limited, that concludes this conference call. Thank you for joining us, and you may now disconnect your lines.